A finance lease does not transfer ownership from the lessor to the lessee, but as we'll see from the conditions as they name them, it seems like it may be headed in that direction. So think about it that way. A finance lease has a condition where at the end of it, it may end up being a transfer of ownership. And the reason I bring this up is the Wall Street Journal reported today that we still have huge commercial office buildings that don't have nearly the tenants they had before the pandemic. Huge office buildings, some of which are completely empty in major cities. So that's why I think it's important to talk about leases. If you work in accounting, you're going to end up dealing with leases at some point. So this used to be called capital lease. We now call it a finance lease. The lessor is leasing to the lessee, to get the language right. So what are the four conditions? Any of the one of the four, it's a finance lease. So the first one is that ownership transfers at the end of the lease. That's pretty obvious. That would be a finance lease. It has a bargain purchase option, which says that the option to buy the asset is below the fair market value, something you probably wouldn't want to pass up. We call it a bargain purchase option. If that's true, it's a finance lease. The lease term is 75% or more of the useful life of the asset. It now says in the guidelines that it's around 75%. It used to be a solid number. Now it's not so much. It's a complex issue. But for this discussion, if the lease term is 75% or more of the useful life of the asset, you're essentially using up the whole asset while you have the lease, and there's not much left at the end. So it's almost like you own it. The fourth one is the present value of the lease payments is equal to or greater than 90% of the fair value of the lease. So if you're using up all the value of the lease, or almost all of it, 90%, it's almost as if you own the asset. So finance leases are not a transfer of ownership, but they may be headed that way. And another thing with leases I wanted to finish up on was we have seen over the years, at least in my practice, lots of situations where retailers get stuck in leases that they can't get out of. So we think about a sunk cost. A sunk cost or a past cost is a cost that doesn't make any difference for decision making. And often, if you're going to try to close a retail location because it's losing money, you have to remember that the lease payments don't go away because you owe the money by contract, and therefore they continue. So that's a big factor if you're a retailer and you have a lease.